Good morning, everybody. Now let's see what the day has in store for us. CPI printed, and I don't see big red, and so we're happy for the moment with this market. You never know. We'll kind of talk about it. And just on a personal note, I was all ready to go a few minutes early, and I clicked the wrong button and turned everything off and had to redo this. So anyway, here we are. Okay, so CPI printed, we had a non-negative reaction. So we'll call that a positive. Let's take a quick look at the volatility reaction. As expected, the unknown becomes known. So we have a little pullback in volatility. I don't know that it's time to start partying, but at least things are moving in a somewhat stabilizing direction. Okay. Quick word about yesterday. Jesus, where was that? Yesterday was such a wide day. Yesterday, where was it? Where did we open yesterday? Somewhere over here, 68.15. So we opened somewhere around 68, 12, 15, wherever it was. And then once we broke below, even 68, 15, 20 was a scary level. Below 6800, there were a few features below us that we just knifed through. We just knifed through them. Was negative gamma, was just one of those reflexive chases down where market makers are hedging, selling, vol is increasing. We had VIX expiration, which I talked about yesterday a little bit, probably not as much as I should have put as much emphasis on it, but I did say 17.5, and I did say be careful, and it was 17.5, and I wasn't as careful as I'd like to be. I did scrape out green. So it was one of those days. A word about, you may or may not see this here, CTA trigger. Okay, so CTA trigger, what does that mean? CTA, commodity trend advisors, hedge funds that trade the trend, and it's SPX, it's gold, it's Bitcoin, it's whatever they feel like trading. Some are mixed, some are more pure, whatever. That's not the point. The point is they use relatively simple algo methods to add or subtract from their allocation broadly. And Goldman Sachs and Nomura and Bank of America, everybody has that secret sauce where they try to figure out more or less what they do. Nobody knows exactly what everyone does. So if somebody implies that they do, that's a load of crap. However, we do have a broad idea. And the broad idea is short-term CTAs are going to add or subtract allocation at certain levels. The main level, the oh shit level, is the 20-day moving average. Ish. So 67.85, 88. It was 67.80 before. We also have converging 20 and 50 DMAs in that same area, like I think it was 55 and 80, whatever it is. So those areas are important. Some people poo-poo them for their trading, and lots of studies show that crossing a 20 or 50 DMA is like 52% accuracy, basically like a roll of the dice. But they use it, I use it, we use it. It's a common reference point, so we have to keep our eyes on it. And what the gurus say is below that threshold level, over the next week, CTAs will have to sell 20 billion or something like that. Now that's too much liquidity for even Bad Hombre and Richard to sop up by themselves. I might have to jump in, and I don't know if I feel like doing it. So that's possibly, now the flip side of that is if we cross over the magic line, then the bleeding will stop. Broadly, so that's why the pain begets pain, begets pain, begets pain. We saw a very analogous situation in November, I guess it was, when we crossed a couple magic lines. We broke. Yeah, it's October. Yeah, we broke the moving averages. CTA started selling, et cetera, et cetera. We saw the opposite of that in May going into June, when we crossed above the moving line, the magic lines, and we had May, July, they had to buy 50 billion or whatever over a month, and that just helped provide liquidity. So that's where we are now. It can change. Give us 50 points, and suddenly we're back in party on Garth mode, and that's where we are. Breath, if you see advances decline, it's 45.54. I looked today or yesterday, stocks above their 20-day moving average was around 50-ish%, 55%, whatever. So the broader market is not as beaten up as the S&P 500, if you want to use those metrics. Micron had good earnings yesterday, so maybe that'll stabilize stuff. The CPI numbers are still coming in at different, factors of them. Tick Trend, old school, yeah, all that stuff. I don't use Tick Trend. I used to use it. My former mentor didn't like Tick Trend as much as he liked Tick. He liked put call ratio, and he kind of inverted it, using it as a contrarian indicator. But yeah, all those old school stuff, all the standard stuff that it stands the test of time. What can I tell you? Okay, so meantime, we're kind of heading in a very good direction here, folks. And if we cross some magic lines, suddenly, as crazy as yesterday, the last 2 days seem to be crazy to the other way. So let's take a look with that little tension builder. Let's take a look. And for that, we go here. Let's refresh it. Let's make sure I'm on the right day. I am. Okay. Quick explainer. To the right is market makers' long gamma levels. Think support resistance-ish, but different because we bounce between them. And as you approach a level, let's just say this level 67.95, which suddenly doesn't seem as crazy as it did yesterday, 75 points ago. Market makers have to sell. We're not going to talk about the mechanics. They have to sell to balance out their deltas, to be neutral. Their job is to be neutral, not to trick you, not to make the market go anywhere. So they sell as we get there. However, as we pull away, now they're too short, they have to buy. Their job is just to keep the books balanced. They're accountants. Their job is to keep the books balanced. Same thing on the bottom. As we approach from below, opposite mean reverting, they buy, but then we pull away, they sell. And so if we're just between two big levels and nothing is in between, you kind of find a vector analysis balance point. And that's kind of where you would end up if nothing happened, nothing moved. But of course, it's dynamic, things move, volatility changes, et cetera, et cetera. This gives us a broad landscape. And what we do know, prescription, unlike technical analysis, which is looking in the past and trying to predict the future, this is telling us what will happen, not might happen, will happen when we get to a level. We might not know the intensity based on changes in volatility, whatever, trades that happen, and I don't get the data for every 10-minute slices, so it might be a little bit laggy, but broadly these positions stay and the reaction zones are going to be there. Okay, So and looks like we got an update here. The picture looks a little different. Yeah, maybe not. Okay, so what do we see? If over 67.60 here, we have like a 50, 60, we have this little clustery thing, call it from 45 to 60. That's kind of a stally, sticky, whatever. And we kind of stuck there in the overnight session. If we're over 60, minus gamma ladder, accelerate in that direction towards 67.90. Towards 67.90. Towards 67.90. Which happens to be right near where the CTA trigger. Wouldn't life be nice? Okay. Let's get back. But then what happens is once you stall out on these things, then they put you back down. So they act the opposite of these guys. These guys, they pull you up, but then as soon as you stall and start to pull away, they push you back down. So they have the opposite effect of these guys. And when you have a few of them together, then they can sometimes balance each other out. That's the art in this, the quantuition is my little tagline. The quantitative part, but you have to have the intuition, just seeing how the flow goes, the tape reading hours, the wins and losses. You have to pay your tuition for the quantuition. I don't think most of us here paid their tuition. So anyway, over 95, we get into this, what I call fishbone pattern, choppy, sloppy back and forth. Don't torture the data or whatever's going to happen. It's hard to predict what's going to happen. But broadly, it should be stalling out or, kind of having to fight through over 67.95. A battle that I would welcome. Below us, so we have that area 60 to 45, 50, round number or whatever. Where we kind of stuck around overnight before the news. Below that, well, big zone, 67.50, all the way down to 66.80. Looks like that's not going to happen. We've been spared that fate, looks like. But 67.40, 50 breaks, let's just say, then you kind of, would sort of come down toward this zone 35. And here you have these guys slowing it up. You kind of come in here, et cetera, et cetera. So right now we're fighting at the top of this range. And now here's what happens. If, from a gamma point of view, not from a price action or liquidity or depth of book, all that stuff. Other people know that stuff. I'm not saying it doesn't work. I'm saying I don't know everything. I just know some things. I know that shit matters. I don't know. I don't know how to read it. If people come in and start buying 6,800 calls, you see, we already have only 249. We already have some longs at 6,800. If Chewy comes in and buys 1,000 calls there, and Richard buys 2,000 calls there, suddenly we can fly right through this. On the other hand, if somebody says, well, bullshit on this bounce, and buys 2,000 puts at 67.75 right near the CTA trigger, down goes Frazier. So broadly, these other levels are going to matter. There's going to be trades that come in. If volatility keeps coming in like it did, at least in the beginning of the day, what's happening is, okay, so I'm going to have to talk options a little bit, guys, because that's what this is about. The delta of these puts, let's just say, let's make it real quick, keep it kind of simple. Okay, what do we got here? Where do we have some puts? Whoops, yeah. That doesn't really matter. The delta of these puts here at 67.55 right now is less than 50. It's out of the money. Before, it was 50. It was at the money. Moving up, those deltas decrease. Market makers get to release some of the short hedges against it they have to buy. Let's pretend that the stock didn't move. Just by volatility coming down, those deltas come down. Volatility is a piece of the options pricing formula. So just by volatility coming down, pretend we don't move at all these deltas start to come down and market makers have to buy. Also, these levels kind of become sharper and less fuzzy and work better. We'll put it like that. And so here's where we are. See, 6850 crazy. I'm not saying we get there, but there's 2,000 plus calls parked up there. People are long. They're parked there. Could we somehow fight through 6725? It's probably a bridge too far. We have 1,000 here at 6810. And so, you know, I'm not predicting anything, but if we could fight our way through, we have calls at 6790, we have 1,000. So if we could fight our way through this and some call buyers step up, volatility works for us. People who are long put somewhere near here say, oh, these are losers, I'm going to get out. Or, oh, maybe I'm a little profitable. Or maybe some of this big stuff here at 6750. Now, there were 5,000 here yesterday. I remember we talked about it. Okay, there's still 10,000 puts here at 6750. Those are going to decay. Those are going to decay. That will kind of create a bit as long as we kind of hang out here. One more thing, and I'm going to reluctantly relinquish the mic. So I like to talk. I like to explain. I like teaching. And that's QYLD. What's QYLD, you might ask? I'm glad you asked. QYLD is a lot of you are probably familiar with the yield max family of funds. I'm not going to go into a whole thing if they're good, bad, or indifferent. So the yield max family of funds sells covered calls on various underlying, sells it on we're going to say QQQ, NDX, whatever, on the QQQs, on the SPX, which is the XYLD, on RYLD, which is the RUT. They have a yield max on NVIDIA. They have it on Amazon, on Coinbase. They have all kinds of them. They're selling covered calls. Now, the one that matters is, for whatever reason, in their infinite wisdom, on just the NDX or QYLD only, they buy back the calls they sold. The rest of them, they leave them, and that's a market maker's problem or pleasure. So what that means in reality, practical terms, is I don't know about all this, they're going to be buying back. Now, maybe people sold puts there. That'll be kind of clever. Well, whatever. I'm not going to speculate. There's calls at 2450, 4,000 of them that are going to have to be bought. Description. They will be bought, and market makers hedging will respond to the influx of positive deltas. Can't go. So where is that number? 24,500. Nice round number at least. Let's find it. NDX. That's not going to be hard to find because it's right here in the AM expiration. We're looking for open interest. Where are these guys? Where are you? What number was it? That's good. Is it that? Here you are, 2450. They're going to be buying on those puts here. I'm curious if people bought those puts or sold those puts. It's obviously paired to this somehow or another. You have 3 here, 2 here, 100 here, 50 there, and you have 3,000 here, 4,000 versus 4,000. I was born in Nipenau last night. So I don't know what this pair is, but it might be fun to dig into. And so that's a lot of deltas that are going to be bought back. And so that tends to have, there you go. Thank you, G Money. I knew a guy that his nickname was G Money, but we won't go into the backstory of how I knew him. Let's just say he was a less than savory character. So all this positive delta coming in, well, tends to be supportive to the market. Doesn't mean we can't go down. It means we typically go down less. Per studies by whoever. You can Google it, you can ask ChatGPT, whatever. QILD effect, there's been studies, 0.2% move, accounted for 72% of the time, whatever the numbers are. I'd rather have the numbers with me than against me. And that's it. Okay, you have your charts ready?
Me? Yeah, let me pull them up.
And so here we are kind of stalling out over here. We want to get over this mess. I have that identified as a mess. And what are you seeing?
All right, guys. First thing I'm seeing that I want to kind of keep my eye on is how do we react at open to this level here, 6803, 6805. I kind of hope we might get a little pullback in here for an upside move. That being said, I haven't looked at the CPI numbers. Obviously, people like them. So if that is the case, then we might not get that opportunity. We might just push up, which in that case, I think we'll get a stall around 68.55, right in the zone here,
which is roughly 6,800 SPX in that ballpark.
Mm-hmm. So I think it kind of plays well with your string level there as well. Yesterday, I had a bunch of levels. I didn't think we were going to get down there, so I didn't plot them. So today I gave you a little bit more just in case we do have a little bit more of an unexpected move. Bounce zone around 6803, 6780, and then all the way over here at 6730. Kind of some nets here that, again, I see them as support. I don't know how much of a bounce we'll get from them. I'm hoping we don't even have to go down there for any reason today. That being said, two nice reject zones up here, 68.55 and then 68.80, all the way up here, which was yesterday's high. Bigger range today. I'll be a little more patient to call a trend in either direction until we kind of exit this range for my sake, for my trading.
So gun to your head, what do you think happens? Where do you think we kind of end up?
I'd really like to go above 6,800 SPX, which would be above my 68.50 levels, 55 level here. That's what, if you're asking me what I'd like, that's what I like. Gun to my head, I honestly, as of yesterday, I'm kind of in between. I'm still more on the upside, which is why I did open calls last night or yesterday's session. That being said, I'm not excited for them just yet. Break above my range, show me some structure, then I'll ride that with some confidence.
Yeah, I bought a couple MESs, little guys. I'm actually probably going to dump them soon or start legging out of them. I legged into them yesterday during the slaughter and legged back in some more, and now they're decently green. I'm going to start to leg out. So I don't trade that stuff that often. That's not my wheelhouse. But when I see something that looks crazy, I'm going to say this looks crazy. You know what I mean?
Yeah.
Yes, they look crazy. I don't know if it looked crazy to anybody else. It looked crazy.
It did look crazy to me. I'm willing. I'm not going to shake my upside bias just yet. I need to see more confirmation, but it did rattle me a little bit that it kind of came out of nowhere. At least I think so. I don't think any of the news, especially the Oracle news, I don't think that was indicative of this drop. So we'll kind of waiting to see what happens here.
It came out of nowhere, but it came out of the thin gamma land and the Vixpiration. It was, I'm sure there was some real money selling with the fear about, well, I don't know, whatever, the AI crap, whatever, you know, the AI trade. But it was structurally baked in to be fragile.
Yeah.
And that's what happens. You know, and the structure is still not so beautiful, you know, it's still, you know, and just from a TA point of view, when you have these huge bars up and huge bars down in wide ranges, it's a fragile structure too, other than at some key inflection areas. So, you know, that's kind of where we are, kids. You know, hopefully things will tighten up.
Yeah, I mean, I think after yesterday's drop, we were going to have a bounce. Just curious to see how far that goes. That's kind of the $1 million question.
Okay, hold on. What am I trying to do? I don't even know where I am here. Okay, let's get rid of that. Okay. So that's where we are. I'm looking at these silly headlines. Lagarde, ECB, inflation, outlook uncertain, whatever, I don't know. And what I do know is that we're stalling right where we're supposed to. That's all I know. And so now remember we have PPI tomorrow. So we're not done with alphabet soup. We have Japan rates decision overnight, whatever. TikTok, I don't know if you guys know who he is, who follow him. I just happened to read one of his notes, and he's like, I know some of us that have PTSD from last August, Japan carry trade thing, we'll call it a thing. Apparently that stuff matters. Apparently the Albos take that shit seriously. And so we'll see what happens, you know, so that's maybe a big deal, maybe not a big deal, maybe not as big a deal as people are saying. I have one of my resources, just like Vol Traders resources, Tim Gamma Exposure is his Twitter handle, but he's much more of a commodities guy than a macro bro than a gamma guy. I guess he's both. I mean, you know, he's both, but I use him for, he's one of my go-to macro bros. I get the straight shit from him. He doesn't like try to couch it in, you know, other things. It doesn't matter. Or wait, I think you need to worry about that. And that's what I like. And if I want to get in the weeds with him, he'll get in the weeds with me until I say, okay, fine, I don't really want to know. And so that's that. Let's see what's going on here. Yeah, USD, JPY, central banks, all that. Looks like distribution, accumulation. Yeah, whatever. Looks to me like the party is over for the Bears and we're getting ready to set the table for the Bulls. And right now we're just cleaning up one party, one reception room and getting it ready for the next one. So it might be a little sloppy while the cleanup crew is in. Wasn't that a good metaphor? I thought so.
That was great.
So getting back to QYLD for a second. That's not the end of the YLD story, folks. Part 2 of the story happens tomorrow when the YLD family of funds sells X billions of calls at the money, negative delta. We don't like that for the January AM. So they'll be in there tomorrow selling 4,000 NDX calls at the money and 6,000 SPX calls at the money and however many thousand RUT calls at the money and however many thousand NVIDIA calls at the money and however many thousand of all that stuff. So that could have a dampening effect. I'm surprised it doesn't have as much of a dampening effect as it does on the AM expiries. But if some of you have observed, our AM expiry, we've been going down and been blaming it on something else. You can blame it on a lot of things, but you can also blame it on that partially too. That can't be bueno. That can't be good, having X billions of dollars worth of calls being sold a month out. It's just the way it is. Now, there might be some kind of math balance between the ones expiring today and the ones next month, but it's not good. And historically, it has a suppressant effect. So that's what's going on. I have a bunch of positions on in my big boy account. I don't have anything on here, although what I tend to do is whatever they're selling in the QILD, I just tend for fun. Let's just pretend they're selling this one. They're going to be at the money, 24.60. Well, let's just pretend they're selling the 24.75s. I tend to do that. I tend to buy what they're selling. It's 25 wide, costs 15. I'll leave it on and get out at 20 or 21 or something. And maybe now that I saw the move the other people did, I might cowboy it and do something like that. Actually, I did cowboy it last time. I did something like that and something like this. I might do something like that. Just one for fun. This is not a bet the farm trade. This is a one for fun trade. And I'll talk about it in my Discord for my subscribers. We could talk about it. It's trade your own plan, your own risk, whatever, disclaimer, education, all that stuff. So where's the money today? Well, shit. 66.65. Okay, let's see what's going on in 66.65.
So real quick, Doc, I just want to mention, if while he's going through this portion of the stream, if you have a question, pop it in there, and we'll do our best to try and answer it while we're live. If not, we can follow up after you're finished.
Thanks, I appreciate that. And on Twitter, on YouTube, wherever, yeah, I mean, I like the interaction. I like the questions. I think it helps everybody. It helps the other listeners. It helps the questioner, and it helps me. I think it's a good thing. Where was I? What was I looking? Oh yeah, I wanted to, before I go totally cowboy, which is not strange for me. Let's take a quick look at where we have some gammels. Okay, so 66.80, we got some. Okay, 66.80 is a long way from here. 66.65, we have some potential stoppers down here. Not huge, only 500, not a lot. But we have the 67.50, which if that breaks, we're back in ugliness. So that said, the juice is drying up as I'm speaking. Might have to jump in with E-minis and sell a few. The juice is gone. What happened? They pulled the punch bowl. They pulled the punch bowl, guys. And that's it. Punch bowl is pulled. We're at 6,800 probably. The shorts are running for cover. The accumulation distributions are accumulating their distribution or whatever's going on there. All right. CTA Triggerland. Hey, it doesn't get much better than this. So I really don't have a great high probability trade right now. I would sell puts if we went down around this area, or maybe 67, 80, or somewhere with a double six handle. I'm not looking to sell with a 7 yet. If you wanted to be a cowboy, I suppose cowboys only. Something like yesterday's low area. I don't know. I'll put one in for fun. Yesterday's low, come on. And on top, do we get all the way up here? 35. Remember we had to borrow 35? Okay. Something like that. Something like that, just to see what happens. They could always turn it into a fly by doing this, or trade around it. Speaking of flies, let's see where we are. What do we like in Flyland? Okay, so we're at 80-ish. How does that look for a pullback fly? I'll give him 65 cents if I can get it and play with it. How about a call fly? We seem to think that we're going to go up, probably test 6,800. Why shouldn't we, right? So maybe want to do something like that. That doesn't look bad. See if I can cheapskate it for 75 cents. Something like that, just to have some reference points. What I sometimes like to do, and I'll do it now for fun, is where I'm trying to sell. I'm trying to sell the middle. Add a cheap 5 wide just to kind of have some density there. I know it might sound weird. I can see how the options premium are acting when I just kind of look at my open trades. And I kind of know what's happening in that neighborhood. And so for me, it's worth $20 to have that. And these things are pretty forgiving. Maybe you lose $10, make $10, so whatever. And that's really it. I mean, the path is up. The path is up. We know that. No inflation, whatever. So we're going to invade Venezuela. What's the difference? It'll be good for the one that I let get away. I only bought 100 shares because it's expensive stock. And of course, it's one coulda, woulda, shoulda. Was HII, Huntington Ingalls, the ship maker, the shipbuilder. Trump came in, our Navy was depleted. Everybody knew about it. It was in every headline, everything. For years, the Republicans were shouting, Biden and the Navy sucks, what's wrong with them? And we got in April, we got a little pop, then we had the March, April sell-off. That thing went to the toilet. Even though the contracts were going in, they're spending billions, trillions, quadrillions, who knows how much. But I only bought 100 because I figured it's expensive stock and who knows. So I don't know. What made me think of that is we have the fleet surrounding Venezuela. So Venezuela will not invade us. We don't have to worry about invading from Venezuela. I can sleep well tonight. And that's it. Okay. I'm done joking around. Any questions? People need to see the whole market, not just one index. Okay. The whole market. What else is there? You mean there's more than one index? Okay. Let's look at the whole market just for fun. just for fun. Let's look at the whole market. All right. Let's scroll through my crap here. let's look at, all right, what's going on with Apple? Let's make it a 65-minute time frame just so we can kind of get a little perspective. Pull back from the highs. Choppy, I don't see anything to look at. Oh shit, AMD went below 200. So bottom feeder time. ARC poster child for momentum, all that kind of thing. Actually doesn't look horrible. Actually, it's not a horrible looking chart. Avago, bro, I'm sorry. This thing has been taken to the woodshed. Now, I own this for a long time, so I'm not adding to it, but if I didn't, not investment advice, I think that's kind of a decent shot. China, hard to predict. Uranium, I love uranium. I don't know if that would add to CCJ right here, but I do sell puts. I'm willing to at the willing to own level. And I don't know, it seems like a decent level. 80, down in here somewhere, 77. If you want to keep skated down to 68, 70, sell like a 6 months out and just, collect the rent. DMG. I took assignment somewhere in here on that earnings gap down. That's fine. We're back to here. Now it's getting ready to wheel it. I haven't started to wheel it yet. Now I'm going to wheel it. CMG, Chipotle. Salesforce had decent earnings, finally beginning to, look like it's tightening up a little bit. IGV had a decent day yesterday. For those of you that, who was it? I don't know if it's Accenture is today. Somebody else, some other software name had some software names had good days yesterday. Microsoft. Cisco is being caught in the hardware sell-off right in the middle of this gap. So I don't know if there's anything to do. Datadog is a name that I like. I've been in and out of this one forever. Down here, I like it. It's time for me to sell a put. Time for me to sell a put in Datadog. Not you, me. Fortinet, I like this name. Cybersecurity. You want to see the market, right? And now we'll look at Home Depot, the housing thing. Oh, look at that. Look at that. News of my death has been greatly exaggerated. Look at that. Okay, let's look at some indices. IBB. The biotechs had a nice run about a month ago, whenever it was. Now they're kind of pulling back in here. I have XBI, so-called. Bitcoin has not been doing well. I'm not sure what turns it around. It's a whole CTA thing. It's a whole liquidity thing. It's a whole leverage mess. I did a write-up on it once. Okay, let's get rid of Kellogg since they don't exist anymore. Home builders. These interest rate sectors are beginning to respond. IWM getting some life again. Banks, KRE, look at that beautiful KRE. Meta. Who stole it under 600? Everybody here who stole it, raise your hand. Micron, save the day. So many people are buying semiconductors. Who would have thought? Netflix, that whole takeover kerfluffle, taking over, that whole merger with
Warner Bros.
Yeah, the whole merger thing. I'm in like a broken wing put ratio where the long puts are green and the short puts are kind of flat to whatever. And I've been kind of playing around with pieces in it. It's not too many contracts. Worst case assignment, worst case, I will take assignment at 95. That's the worst that could happen to me. 200 shares, which my account can handle it. I would wheel it, so I don't care. I mean, I care, but I don't care. I think cybersecurity, longer term, I'm not a fundamental analyst, but cybersecurity, I mean, or you know how it goes. You have a China hack or Russia or something or whatever, and then these things go flying. I think this is a beat up sector. PayPal is filing to be a bank. It looks like it didn't help them much. RSP, the equal weight, the new star of the show. Looking strong, looking, pulled back with the indices, but looking decent. What else do we want to see? Silver, that's been on a crazy tear. I bowed out somewhere around here. I had some calls and some shares. I bowed out somewhere like, over 50, whatever, 52, 50, that's it. And some buddies of mine have been trading it. God bless them. That scares me. That's scared. This is not a chart. That's not my pattern. Some people love this pattern. That's not my pattern. SMCI, that's it. Now these guys, in case these guys, if I put on just for fun, look at that chart. Just a relatively easy one to trade, very predictable. That was a joke. Let's see what else we have. Oh, TLT sloshing around. I have a repeat trade that I'm in TLT. I sell, I forget, 83 or 82 puts and 90 something calls a few months out. Just sell a straddle and then buy it back at 50%. Tesla had a crazy day yesterday, had a pop and drop. I know some people who made on the pop and then got caught in the drop, but they still dumped their calls. Why is Walmart not showing anything? Walmart doesn't exist? Okay. Not sure what happened there. Energy's been acting pretty good. The financials have been acting great. Of course, the consumer staples have been doing good. Why? Because the old rotation thing. We're not going to talk about dispersion. We don't have time. Oh, shit, it's 9:20. See what you made me do? See what you made me do? Okay, I'm done. I'm going to get
next time. Let's do some Forex too, Doc. Might as well.
Huh? STZ, yeah, it's another piece.
It's one thing I have not heard Doc talk about much is Forex. But just want to interject here. Please subscribe. Doc's doing these every day, so tell a friend, get the word out there, and so he can share some of his good work. Thank you very much, sir.
I appreciate it. And there's 1 week free trials, I'm told, by whatever.
Yeah, there's a 1 week free trial, and keep an eye out for Friday. We'll be posting a holiday discount for the server and for the boot camp if you're interested.
Right. We'll have a stocking stuffer.
Yeah.
Nice. I'll be keeping an eye out for that.
Okay.
Have a good day, everybody.
I'm out of here.